Oil prices continued the rally that started on Monday after the EIA came out, showed lower stockpiles and also higher imports in China. So there seemed to be a bit of movement around in oil inventories. However, at the end of the day, we didn't see prices really extend all that much. They were up initially and just kind of held steady there, back into that old range, that $60 to $66 range that we've traded so comfortably in over the last month and a half. And I think that right now, given the fact that we've got so much kind of teetering on what's happening with global growth, oil prices likely to remain pretty stagnant as we trade in that old range. Still near the highs of the year, but not certainly off that $66 high we saw not too long ago, and bouncing off the $60 low we saw just last week. That now we kind of are back into that comfort zone, that area where the market just sort of teeters back and forth like we did today. Although it was higher, we didn't see a full extension like we would have normally. And if you look at the dollar's really been kind of an enigma. Since the May FOMC, we saw big declines followed by a big rally, and then it's kind of traded sideways. Certainly Fed policy uncertainty, certainly global growth uncertainty, certainly China trade deal uncertainty and any ripple effects all playing a hand in that. And I think right now that is one of the reasons why you're going to see oil trade back in its comfort range, unless there's some kind of geopolitical unrest somewhere that causes something from out of the blue. But I think ultimately right now a steady dollar, sideways dollar. You may see the dollar weaken a bit on news and headlines, but ultimately it seems to be trading sideways. That will keep oil within the range. And if you look at positioning's been pretty steady since the middle of February. You've seen speculators add to their longs consistently week after week until April 30th, until last week, till last reporting period. We did see a modest exit of long. So right now, obviously the news is this. You've got OPEC meeting at the end of June. They're going to continue or extend their production cuts. You've got a global growth issue going on here, which could tug of war that. But ultimately, they want higher prices out of the Middle East, whereas President Trump has touted that he wants lower oil prices. So I think that at this point, it's going to continue to be a tug of war, but the production cuts are working. If we can get global growth back on track, that would obviously be another bullish movement for oil prices. Right now, it's all kind of waiting for the dust to settle. And I think this China trade deal, which has hit the headlines pretty hard over the last 48 hours, is really what's dictating the front and center trade. But in the long term, I think ultimately it's going to become about U.S. production. It's going to become about global growth, and it's really going to become about production. Whether you're going to see subsidization from Iran and Venezuela, or you're going to see the Russians and the Middle Eastern oil producers back off and continue to cut. So right now the market seems very comfortable back in that old comfort range, but certainly things can change very quickly in the world of oil, as we know. And the dollar right now trading sideways, not adding to anything, and likely to continue to see oil trade on a sideways to slightly higher path.